Rick Rule for Rule Investment Media, sponsors of the 2024 Natural Resources Investment Symposium in Boca Raton, Florida, July 7 through 11. Whether you attend in person or attend via live stream in the comfort and convenience of your own home, please note that we're going to give you between 50 and 60 hours of intensive and valuable programming, more than you can absorb during the 4 days of the conference. To that end, all conference proceedings will be recorded, and you'll have the ability to access that over time, which I urge you to take advantage of. Further, to that end, we are interviewing every exhibitor and every speaker at the conference before the conference, so that our attendees will have the ability to reach out to these exhibitors even before the conference and come to know more and more about the companies in anticipation of the conference. This will allow you to allocate your time and your capital much more efficiently. I urge you to listen to all the pre-conference recordings so that you can pay attention to what really truly matters to you. Further, unlike any other investment conference on the planet that I know of, every single public company exhibitor at this conference is owned in my personal account or in accounts owned and managed by myself. This means that every single exhibitor at this conference has been vetted. It doesn't mean that just because I buy a stock, the stock goes up. But it does mean, like, unlike any other conference I know, that every single public company exhibitor has been vetted. The interview that we're about to have is with Shaun Usmar, CEO of Triple Flag. I'm delighted to say that I have a long experience with Triple Flag. When I was at Sprott as a competitor, now that they're public, as an owner, and I must say being an owner is much more pleasant than being a competitor was. Shaun, thank you for your efforts on behalf of shareholders, and thank you too for your support of the Natural Resources Investment Symposium.
Rick, thanks. It's a real privilege to be a part of this today. Thank you.
Triple Flag really is an outgrowth of a commodity trader, and you used your access to the mining industry to get into mining finance. So tell us something about what Triple Flag does now in the mine finance space and how that might benefit shareholders.
Look, in simple terms, we're a capital provider that provides at-risk capital to the mining sector while providing really a valuable, highly diversified top-line exposure with a lot of optionality to precious metals investors with the highest growth rate in the sector since we founded this company 8 years ago. So I was an engineer, started my career, crossed over to the dark side of finance at companies like Billiton, where I was a senior executive of BHP Billiton, Xstrata, and then I was Barrick's CFO just before leaving to start this company. And there's clearly a need. The sector needs smart capital that's long-term. And that's what we've been doing.
Let's go a little deeper. What mechanisms do you use to provide risk capital to the mining industry? And how is it that you reap your rewards for doing that specifically?
Yeah, so I think the first thing is we've seen an increasing amount of passive capital to trade happening in the mining sector. And I think increasingly conventional forms of debt and equity underserve a long-run capital deployment business like the mining sector. So for us, we've used the streaming and royalty business model, competing directly with the big three in the space to provide structured finance, so primarily streams with some royalties over time. And that provides risk capital where we participate. If these guys build new mines or they acquire businesses, they're successful, we participate. We participate particularly where we provide the upfront capital at risk. We participate with ongoing payments with stream financing. But if they're not successful in bringing on their mine, we share the risk. And when they do succeed and they extend mine lives, as hopefully your due diligence in your portfolio proves up, or they expand the mine, our shareholders participate. So what that's meant for us, we started with nothing, 8 years ago. Capital was provided as a private business, as you know, Rick, from Elliott out of New York. And Paul Singer is, I think, one of the most savvy guys out there. It was a real privilege to have them as a founding shareholder in us. But today, over the last 7 years, that's been a 34% cumulative annual growth rate in operating cash flow year on year. Of those 234 assets, only 32 are producing cash. And there's just this huge amount of optionality with a lot of growth that we've demonstrated to date and a lot more ahead, even before we continue to do investments in the future.
And Paul, first of all, before we talk about the benefits to investors, let's talk about the benefit to the issuer. Let's talk about the disproportionate amount of capital that you put up relative to the proportion of revenue generated by the mine. Admittedly, your margins are much better. Employed correctly, this really generates increased return on equity for shareholders because of the disproportionate net amount of capital that you put up relative to the percentage of revenues rather than the percentage of profit that you
Yeah.
derive. Could you describe that mechanism for us?
Yeah, so a lot of this is informed both when I was Barrick CFO, we did a 610 million stream at Pablo Viejo. We approach our business really as former executives, saying executives have choices when they grow their businesses. They can try and issue equity. It's dilutive. They can try and do debt. Very often at certain times that's problematic with the balance sheet. There's a number of different alternatives, but by providing, particularly in polymetallics, where copper is a great example, our marquee asset is North Parkes in Australia, great location. We did a $550 million check there, back in 2020, where we stream gold and silver, which is non-strategic to the copper miner, and provides a very competitive cost of funding in an asset that's been going for 35 years, has decades of life ahead of it, and provides us with, our margins, our cash margins are 90% with huge optionality. So that asset is, to put your point in context, I think as a copper miner, back in 2000, there was about 1 million ounces of gold in reserve. They took out 1.1 million over the next 20 years, and they got just under 1 million ounces of gold in reserve. So those are the sorts of assets that you love to be associated with because they've got so much prospectivity. And even then, with beyond the visible mine life, there's over 1,000 square kilometers that our stream is associated with. So it's the sort of thing that my grandkids one day should surely participate and benefit from. So we provide that capital. It's very competitive to alternatives, and we get to participate with the miner as they succeed over time.
And what our attendees need to remember is that after the initial capital infusion by the royalty or streaming company, when there's a capital expenditure at the mine or operating expenses increase, you don't get a bill. You just get a check.
It's the beauty of the model, right? It's you carry the risk, but you participate in that sort of ongoing investment. And as you know, Rick, some of the best return you'll ever have as a miner when you've got operating mines with good mineral endowments is to continue to explore and to continue to extend your mine life. You have the know-how, you've got the people, you've got the equipment. It's the best return you can generate. And you, as a streamer or a royalty company, you participate in that, and including when they increase. And we've seen a lot of that in our 8 years so far already.
Shaun, I've learned in 50 years in the business that big deposits always yield big surprises, and they're always good. Small deposits usually yield surprises too, but they're often not so good. If you could take us through some of your principal assets, either producing or not producing, and describe how those assets help exhibit value for Triple Flag shareholders.
Yeah, it's if you look at our website, our strategy has really been around deploying larger sums in bigger deposits, to your point. Things that generate good cash, good growth, that you can create that flywheel of cash to pay dividends, which we've increased 5% year on year since we've been listed, and we'll continue to focus on trying to grow that. But primarily the best use of our capital is to continue to reinvest in growth. And I shared our cash growth rate, but then we've got, of those 234 assets, 200 in that other category that on some future time horizons are going to develop, future optionality and growth for our investors that people aren't even focusing on. But the highest and best use is on those sort of marquee assets, as you mentioned. So I touched on North Parkes, 5-hour drive from Sydney, Australia, the first fully automated underground mine in the world, multiple ore sources that at one point was owned by North, then Rio, then CMOC, and now Evolution. And these are assets that have been drilled like Swiss cheese down to 200 meters. They were looking for shallow open pits. We've got a great one, a couple this year, E31 and E31 North, which will see essentially the doubling of our gold output. And we're experiencing it. We just had a new record again this last quarter, new record in ounces and in our earnings. A large part of that was that mine, which has seen a 90% growth on the prior quarter as it's hit a new gold grade zone. But there's multiple porphyries. This is, one of those mines which is large, and it's allowed itself it was the first fully automated underground mine in the world, for example. And it's one of these where it's got 500 million tons, currently being mined at 7.6 million tons per annum. That's all reserve and resource, where the guys on the ground talk about this being a mine that'll go on for 100 years. And that's before you consider there's 1,000 square kilometers around that. So when you're thinking about growth and risk and value, if you've made the sort of investment we have, it's a sort of mine that I mentioned the 2000 to 2020 sort of time horizon with that reserve replacement. I suspect it would be a bit older, but if we did this 10 or 20 years from now, we would have harvested a lot of cash, and we'd be looking at a very similar sort of mine life. But the potential as well for increases, because we invested it at 6.4 million tons. It's already at 7.6. And as you can imagine, with 500 million tons of resource and reserve at reserve grade, there's so much more to come, and it does lend itself to potential expansion. The other is our first investment on Cerro Lindo. It's a VMS-style deposit, copper, lead, zinc. We stream silver as a byproduct. Get a couple of million ounces a year typically. They mine at a very low cost, bulk mining. And I think it's one of the features when you look at our portfolio. We have the highest concentration of underground mines amongst any of our competitors. And as you know, one of the benefits of that, particularly when you have a big mineral endowment and a big land package you can participate in, is once people are underground, they have a visible mine life. They drill more once they're there, and they prove up additional life. And that means that there's often a lot of additional life beyond what is visible. We're seeing that at North Parks with buried porphyries that weren't visible, which we suspected were there. We already have the mine life beyond what we had invested in and fully recouped our investment on Cerro Lindo, which we did as our first investment years ago for 250 million. So you'll see the bulk of the investment and the portfolio is in those high margin cash generating assets with growth and mine life extension. And then we're seeing others that come in from time to time, like we just had Kur. We settled with them in this last quarter. We've got Kensington that's come in. That falls in those 200 other asset category that from time to time will come in that investors won't pay attention to. That 20% cumulative annual growth rate in ounces over the last 7 years, that's come from these sort of more mature ramping assets, which I think translates into lower risk.
Shaun, thank you for your efforts on behalf of shareholders, particularly myself. Thank you, too, for the ongoing and growing dividend stream, which I assure you I appreciate. And thank you, too, for your sponsorship of the Natural Resources Investment Symposium. Tell me this, if my attendees want to learn more about Triple Flag, and they want to learn it from a living, breathing human being as opposed to from a filing statement, who might that person be and how might they reach him or her?
Yeah, there's a member of my team, David Lee, who's the right guy to connect with. David's email address, you can find him through our website. But otherwise, it's dlee@tripleflagpm.com. And Rick, thanks again for the opportunity. I think just one thing to leave you with as an idea is I think there's no substitute for actual ownership of a business. We founded this. We have the highest insider ownership. And to your point, the only thing that really matters is how do you really build a high-quality business and grow shareholder value over time. And I think you'll see that when you look at our team and our register. It's been a great 8 years so far.
Well, I'm glad that you added that. I prefer to invest with partners as opposed to employees. So thank you for that. I look forward to hosting you in Boca Raton. Thank you for your sponsorship.
No, thank you too. It's great spending time with you today.